Hello, I'm Adam Grimes, and welcome to ChartSchool. So this ChartSchool video is a little bit different. What I've done here is cut out part of my daily analysis that I do for my Market Life Premium clients. This was done on the close of September 17th, 2018 for the following trading day. And the point of this video is to show how to use some real quick and dirty market stats to understand what's going on in the market and what might happen the next day. Now, keep in mind this analysis was done, my analysis was done in less than 5 minutes in an Excel spreadsheet. So it is not exhaustive. You're certainly going to see things that if you look at this and think, oh, you probably should have done this, you're probably right. You know, at the very least, I probably should have just looked at counts, like how many times the close was higher instead of just looking at the average. But I talked through a little bit of that for my clients. And the point of this is seeing how you can do this work yourself. Not so much how to manipulate the spreadsheet. I can't teach you that in 5 or 10 minutes. But assuming you have spreadsheet skills, kind of the next step, how to think about the data, how to ask questions, and how to use the answers you get to know how to shape your activity the next day. If you'd like to see more of this work, of course, check out marketlifetrading.com. We do all of our subscriptions are absolutely guaranteed with what I call my free lunch guarantee, which is a little bit of a joke because we know there's no free lunch in markets. But if you try the service and you really hate it, you think it sucks, not only will we give you your money back, but I also will buy you lunch. So it's literally more than 100% money back guarantee. It's marketlifetrading.com, but this is not really an advertisement. Here's the point of this video. Lagging in recent periods, but to my eye, it is clearest on the NASDAQ. And what we're looking at here is this downswing, which is not huge, but it's a little bit of new downward momentum. Does not really catch my eye until I see step 2, which is this reluctant bounce. So then I start thinking that we are looking at a corresponding move here, which is only down to here. So we're not talking about selling some kind of major sell-off. What this probably will be, if this resolves in this way, is very likely a complex bull flag, which will then lead to new highs. We're still in a bull market. This is no forecast of any kind of major collapse. So I want to be clear about that. I also want to show you something. Endure with me for a moment. Here is one of the ways that, and if this does not interest you or goes over your head, I don't mean goes over your head because it's too complicated, but it's just not how you want to think about markets, then feel free to ignore it. But I want to show you one of the ways that you can use Excel to very quickly ask statistical questions. And this is really rough and dirty and would only serve as kind of a first step of, hey, is there an edge? So you look at this chart and you ask yourself, okay, is there any, first of all, you have to decide what you're testing, and that by itself can be quite complex. So what I want to test is, I notice that we have a moderately large down day. And if we look at the sigma spikes, you can see the sigma spike here. There are plenty of other days that are this magnitude of this current day, but it's a little bit unusual. The second thing I notice is looking at the daily bar, we have a day that opens on the high and closes on the low. So it's a very directional day. I think the candle, here's another one. I think the candlestick people call this a shaved candle, maybe. Is that the term? I do love the poetic names for candles, but unfortunately, when you test them, they don't have an extremely strong edge. So I don't. They're not really kind of top of mind. But okay, so those are the two conditions that I'm going to test, and then I will show you how I do that in Excel. So what I have done is set up a column here. I believe here. As I said, bear with me. So what this is doing, I pulled my sigma spike and close as percent of daily range. I pulled that out of my charting platform. You could calculate that. If you do, it's obviously more steps. Very easy for me to pull from my platform. So then I write a formula that says if the sigma spike is less than -1.5, and if the close is percent of range, and that's simply where the day's close is in the day's range. If that is less than 0.05, so we're closing in the bottom 5% of the day's range. Says nothing about how big the day's range is, says nothing about any other day. It's just looking at where the close is within today's range. Then give me a 1, otherwise give me a 0. And then what I'm testing here is I've created just looking at what is yesterday's low as a percentage of today's high. In other words, what's the return from today's close to tomorrow's low? And then over here is where I actually do the calculations. Don't worry about how I do that. I do it with a sum if and then subtract by the number of events. So looking back over 20 years of the S&P, I get 130 events, an average return of -1.38%. Now, be clear, please, this is important. So what we're looking at is a day that basically does this. And my pen doesn't do short lines very well, so that kind of sucks. Sorry. So a day that basically does this. And then what we are looking at, we don't know where it opens. We don't really know where it closes. All we are concerned with is this move from the close to tomorrow's low. In fact, it may close up here. We don't know. We're just looking at how far under today's close we trade. Now, 1.4%, let's call it. However, the average we need to know, this is of all days, is about -1%. So the way I read this, now, is this statistically significant? Well, we really should do more work, right? This is just kind of a first look. So what this shows me is I think there may be an edge for some downside tomorrow, for at least some intraday downside momentum. It is hard for me to imagine that this would not be statistically significant, but it's possible. It's not conclusive here. You can't really tell from the data I have here. We need to do more tests. However, let me show you something else. Here's the point. So rather than testing the close, rather than testing the low, let me test close. So now what we're looking at here, I've changed my criterion to be to tomorrow's close. So close to close. All days, the average close to close is 0.04%. With this condition, it's 0.4%. So this is the kind of work, and I used to do a lot of this. You know, when you see patterns, structuring the question is, we could spend all night with this, frankly. You know, maybe I could rattle off 8 to 10 ways we should test this differently. But if you get your hands dirty and kind of play with the data, you will start to understand these tendencies. You will start to see these tendencies. You don't need to you don't need to be bound to all the market stats that people throw around, because I'm not going to publish this on Twitter. It's not exciting, but it's very exciting for me to understand what's the takeaway here. Well, so when the market closes down kind of big, there is an outsized probability of us snapping back. Now, this is no secret, right? Because I tell you stocks mean revert. This is one of the things we're looking for. However, there's also probably an outsized advantage or an outsized edge to the market trading lower than usual. So maybe we can expect a little bit more volatility. Also, it's only a couple hundred results. If I was really interested in digging into this, I would go back and look at each result. And there are all these sayings floating around, like never cross a river because it's on average 3 feet deep, something like that, meaning that our average is really good measures. Yes and no. That's why I'm saying you need to look at other things. You need to almost look at a case study of each of the events. You certainly need to look at distributions. You certainly need to consider measures of variability, but also understanding the average, which tells us, in fact, what usually happens. That gives us some information. So just kind of want, and again, some of you may have not found that terribly interesting. Some of you may have some ideas now about how you can do your own investigation. So in terms of broad market, this is really being trade driven, and we will see